Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, like, and share these videos. On Thursday, we got the release of GDP, and it's almost as if they released the number ahead of time. It came in exactly as most people were expecting at -5. It's as if they decided to leak the number so everyone would know what it was going to be and there'd be no surprises. Who knows what's actually going on? -5 is a bad number. That's first quarter. Second quarter, we're likely to see another minus, which will put us in a technical recession, and that'll give another piece of dialogue for folks to talk about. As the economy continues to open up, we are seeing an effort by some states to try to curb some of the new cases that are coming out, but markets didn't care today. They cared yesterday and not today. The algorithms were very quiet. We saw a very narrow trading range until the last hour of trade when it decided to explode to the upside and the S&P finished up about 1.1%. The one thing that did happen that weighed on everybody's mind was the Fed did show up in some form. They announced that they were stopping 30 of the largest banks' buyback on their stocks, as well as limiting their increases and control over their dividends. This sent the bank stocks rallying, which were the leaders in yesterday's rally. In a way, the Fed did intervene. They did posture again, and I keep hearing those words from Powell that they're going to be forcefully, proactively, and aggressively using their tools. Most of the time they're jawboning. Today was a big move. As we go forward, we're going to continue to see efforts of the Fed to posture around the markets in just about every sector. This continues to suggest that these numbers that I'll go through in the technical section here in a few minutes continue to be solid support, and the markets aren't likely to decline from these current levels. One of my old mentors used to say, never sell a quiet market. And we were quiet all day. In that last hour, you saw the bids come in, finishing at the highs of the day. Dow Jones was up right at 300 points. Today, there's a couple reports, nothing material, nothing that anybody's going to care about. One of the things I will cover in the technical section tonight is this bond reallocation scenario. Now, in our Portfolio Expert software, we do have a 60-40 model, and it rebalances once a year, and I was curious to see how out of balance it is. And it's substantially out of balance. There is something there on this trade, but I don't think it's going to be really big. I think a lot of folks have already been moving some money around coming into this rebalancing period, and I'll go through that here shortly. When I was doing my research tonight, what it revealed was nothing real exciting in the future. I'd like to tell you there's some great volatility, downside, upside. It appears that we're going to get at least 1 to 2 more weeks of this sideways trading range that we've been seeing, with the bottom being established this week around this 30-20 level, which is the 200-day moving average. Let's go ahead and take a look at the charts and see what they're telling us about the activity for tomorrow. And on Sunday night, I will set up the week once we have seen the close on Friday. As I mentioned in the opening dialogue, I'm going to show you the 60-40 strategy in our Portfolio Expert software. And I've selected it. Let me go over to the light theme just so you can get a better view of the charts. Now, this chart here represents the performance of 60-40 versus the S&P 500. And this is set to rebalance just once a year. So we're going to see the actual drift on the 60-40 strategy if you did nothing at all this year. One of the other things that's happening here is you'll see that the blue line, which is the 60-40 strategy, is outperforming the S&P 500. And the reason why that's happening is because it was allowed to drift. This is something I talk a lot about in allocation theory, is you want that drift to happen and you want to slow down the number of times that you rebalance, because the more you rebalance, it actually dilutes the returns over time. So if we could set this to rebalance every quarter. The reason why it's performing like it is because it was allowed to drift. So drift is a good thing when the stocks are stronger than the bonds, just like what we've seen. Let's take a look at the open positions page. And what you're going to see here in the percent portfolio, you're going to see that the bond, we use the Vanguard total bond versus the SPX, and that shows a 30.59% currently. It started at the beginning of the year at 60/40, so it's now 30.57, and equities are now 69.160. It's right at 10% out of balance. As I mentioned also in the opening comments, I expect that a lot of folks have already been moving this money around. It's not like everybody's going to trigger the trade all in one day. Maybe we've seen some of this going on as the market's been consolidating over the last month or so. This is nothing new. If you're a portfolio manager, it's possible that some folks waited to the end of the month to rebalance, but most likely this is already done because typically the rebalancing is done quarterly. For the date to be at the end of June, which is not the end of the quarter, my guess is most of this is already out of the market and it's not a factor. This is what I was referring to when I discussed that I did not think this was a material trade. It should not be happening on 7/1 or right now. It should have already happened in June 1st, and I believe that is what was going on during that time. As we look at the futures, they've been positive most of the evening, and as the early London crowd came in just a few minutes ago, we're about a half hour from the London Open right now, and they came in with some pretty heavy selling. We were actually up about 8 handles, now we're down 7, so there's some pretty substantial selling came in. The action that we saw yesterday in the markets at the end of the session was substantial from the standpoint that the market was able to rally back and close up at the highs of the session. Now we're seeing that pullback, and I have the market grid up here. You can see that S1 is 30.49. We're trading 30.65. So there still could be some bigger numbers on the downside. My expectation for the futures, and when we go through the cash here in a minute, is for a narrow range, an S1, R1. We could see S1, R2 if we start to see some short covering ahead of the weekend. Right now we're seeing the London folks coming in doing some pre-selling prior to the open. Looking at the cash, one of the things that you'll notice in looking at the market grid, and especially when they're plotted on a screen like this, we now have turned this angle back up. So the grid is now suggesting, as I mentioned on the futures, the grid is suggesting that we'll see a higher price range. So for today, you can see that R1 is 30.97, R2 is 31.12. I'm expecting to see a move up toward that level. S1 is 30.70. Based on where we're trading right now, we're going to be coming in at that level. We could trade down to that 30.54 level. And if you look at what happened yesterday, we spent a lot of time right at that 30.50, 30.51 level. There's a substantial amount of support at that level, and I don't see it breaking below there and getting down to the 30.39 or 30.26. That would represent a retest of yesterday's low. I don't see that in the cards right now based on the configuration. You also see that PPM1 has turned up substantially. It's about to break through its second derivative. It's currently at a 0.26, which has quickly moved it back into a trend level. There's only a 40% probability for it to close lower today. The configuration suggests we should close higher today. Looking at the market grid, you're going to see that the expectations are for an extreme today of 31.41. The downward extreme is 30.26, which is equal to yesterday's low. But the configuration suggests that we're likely to see a 30.70, possibility of seeing 30.54, but my expectation is that we're probably going to see a 30.70, which would be an S1, possibly R1, but most likely we'll see a R2 high above 3,100. And if we can close above 3,100 today, that's going to be very positive if we close back above that number. On the downside, a close under 30.54 would be negative and set some negative expectations for early next week. Make sure you understand those numbers. This is what I refer to as a pivot day. After a big down day, you get the up close The good news is we were able to print a new low and close higher, so there is a minor reversal pattern. S2 3054 will be most likely the extreme, so we could see an S2 R2 day. We're seeing a pickup in volatility at least over the last 3 days, so this is why we're seeing this broad expectation on the market grid. The market grid actually adjusts to the volatility on a 3-day rolling basis. The overall pattern would continue to look at that 30-20 number, 200-day moving average as a major support number, 40-period moving average, and the 200-day moving average, which are clustered right together right now. You're looking at 3011 is the 40-day moving average, and the 200-day is 3020. I've talked about this beginning on Sunday night, that there's a major cluster of support here, 3020, all the way down to 2984. And I will discuss on Sunday night, I will break down exactly what the patterns are going to look like and build some expectations for the week, as I always do. Looking at the NASDAQ, here's the market grid for NASDAQ tomorrow. So if you want to pause this and jot these numbers down, this will be helpful if you're trading the NAS. The low right now, 1070. The S1 is 1020, so there's potential for some more downside here. And then just like in the S&P, my expectation probably an S1, possibility of an R1, R2. Folks have been talking about a couple of nights ago, I had the video that said NASDAQ 11,000. That's still valid. We're still looking at some upward targets. I don't have the Fibonacci's on the screen here. The minimum target is 10.3, but most likely we're going to go somewhere between 10.7 and right at 10.998, I think is the number, and I just rounded it off to 11,000. So this pattern, as I've talked about, is very bullish. We're seeing the PPMs remain in this flat maintenance mode. I talked at length about this the other day. This type of activity in these PPMs tell you that this trend is in maintenance mode. There's no way this trend is ending here, not at this moment, and there's still a lot of underlying support. We could trade as low as 98.61. I don't see that happening. I expect that we'll see that S1. The next number below that is 99.44 S2. Maybe like the S&P, we could see an S2 R2 number. We'll just have to see how this thing unfolds. There's really nothing out there to move these markets tomorrow from a news standpoint, unless there's some corona news or something that we don't know about. What my expectation is, we're going to see that S1 R2, which would put us back at 10,231 on the futures, and that's minimum. We could see an R3 number. What I'm thinking is going to happen is going to be some short covering ahead of the weekend. I don't think anyone wants to be long or short in this market right now, and that's the type of range that we're in. So this will complete the video for tonight. I want to thank everybody for all the participation we had this week. As far as the WaveTech research tool goes, the live stream, we hit 3 hours. It was really super fun. Had a great time, got a lot of things covered. So if you want to hear some of that, individual stocks, all that stuff that I covered, you can get that by watching that live stream on Wednesday. Anyway, folks, have a great weekend. I'm looking forward to next week, and I will talk to you on Sunday night. Thanks again for watching.